All right, we are live at 9 a.m. I didn't think I'd have to go through this again, but here we are. Thank you, Bank of Japan, for making me wake up before 9:30. What's up, Roy?
Hey, not the market. Not the
Yeah, not
market.
the market.
My net worth? No, not my net worth. My spirits? I mean, not really. Like this is one of those. This could be one of those historic days in the market that we hear of. Black Monday. It's not going to be that bad because we have circuit breakers. There's a lot of liquidity on the side. So they'll have to have a different name for it. I'm proposing Bleak Monday because things look pretty bleak out there. And I'll say this a couple of times in the stream if somebody is tuning in or just catching this at some point. You are more than your net worth, and not just talking to you, Tevis. I'm talking to everybody out here. It's easy for people, especially if you're newer in the market, to look at this and just think, "Oh man, I'll never be able to retire. Or I've lost it all." And there's probably somebody that's watching that they might lose it all. You're heavy leveraged. You've made some bets as far as options or something like that. You're worth more than your net worth. You can recover and rebuild. So if honestly, in all seriousness, if anyone out there is like thinking of hurting themselves, harming themselves, there's suicide hotlines for a reason. Call someone that loves you, or just uninstall the app, look away, make your moves for the day, and just kind of forget the market exists for a little bit. You do you, but don't hurt yourself, okay? And now we can talk about the other stuff, but that's important.
That was a very serious sentiment. I, on the other hand, was just going to show people this. Here's 5 TikTok dances you can do to prevent a cataclysmic financial collapse. So we can get ourselves out of this, guys, if we really all band together and try. But no, I mean, look, in all seriousness, like we're down not even that much in comparison. Like I might have lost, I don't know, the gains from the last couple of months, maybe. And I've been in crypto long enough to be like, okay, well, yeah, it sucks. And it's probably going to keep sucking for a little bit. But at the end of the day, like it just sucks because this is a thing with, March of 2020 as well. Like things just felt too fast and you weren't able to really fall on like steady footing because everything just felt in a way too rapid pace. And that's, I think, the thing that made it way scarier. That's, I think, what's going to happen today. I mean, everything's like down, like all the mega caps are down like 10%. But I think it'll bounce back just as fast, just as we did in COVID, right? So we'll see. I mean, we'll talk about that.
Yeah. We'll talk about the why in just a little bit. Can you throw up my screen real quick? Yeah, this is, of course, the largest holding.
Of course.
And I guess Palantir missed earnings, even though they have it after earnings today, or after hours today. But yeah, down 13% in a day, 21.48 right now. It got just above 20 briefly. I mean, my portfolio, I don't know what percent, and I've got thankfully a lot of cash, but it's painful. Like it's not, it's close to 30 like 2 weeks ago. So just terrible. But the craziest thing is, that's trading like a meme coin. If you look at the NASDAQ, and 5% is looking good compared to where it was briefly. That is just crazy. The S&P 500.
I love how I buy the QQQ for like the first time in my life, and then it immediately falls like 15%. Like I was told this would be safe, guys. What's going on?
Yeah, and the reason why we're falling is, and we'll talk about it, but the real reason is Tevis bought.
Yeah.
And he bought the top, and that's just a good time to sell or make hedges. So Tevis has promised to tell me like if he starts buying Palantir, because and I think that you did. You must have bought like a share or something, or any of the stocks that I'm holding, just because I need to know just to be safe. We can't take more of this, Tevis. Please don't buy the NASDAQ today, please. S&P 500, this is the SPY, almost 4%. What you guys need to know is there are circuit breakers in the market. So 1987, Black Monday, didn't have circuit breakers. That, I think, led to the creation of circuit breakers. If the S&P 500 drops 7% in a given day, it'll trigger a 15-minute market-wide halt. So don't be shocked. There are individual circuit breakers. You're going to see in stocks that you own and have a lot of halts today. That happens on days like this. I don't know that we're going to get a level 1 halt, but at 7%, that'll happen for 15 minutes. Level 2, I believe, is 13%. That's another 15 minutes. We're not going to see 20% down on the day unless Iran and Israel start a nuclear war, which, hey, it's a possibility. I don't think that's happening, but if so, the market trading day is over. So we just say, okay, market holiday, everybody take a break.
Seriously, it's a snow day in the market. Just like turn it off and go to the park or something.
Now, let me pull up VIX futures just to see.
Let me show you this first. Sorry, let me do this. I broke out my trusty Biden mug.
That's about right.
That's what I'm doing today.
And to be clear, like this today, we talk politics some, but this today is not like a Biden thing, a Trump thing. Like it would have happened either way. It's the Japan yen carry trade. It's basically a massive margin call. We'll break it down here in just a few minutes. This is a volatility index. It's tied to the S&P 500. As volatility increases, well, let me do this all time. So we're at, and this is pre-market, at 62. Look at the times in history. Can you see that? Okay. This right now is the highest the VIX has ever been, ever.
So actually, that's not true. Let me throw this up because it looks.
Oh, you're right. Intraday.
Yeah, exactly. So volatility index is now trading at its 5th highest level on record. Since July 1st, the VIX is up over 330% and trading at March 2020 levels. The last time volatility was this high, the global economy was heading to a shutdown in COVID, basically. And as you can see, the other spikes are 2008 and then COVID in 2020.
Yeah. But I mean, like you can see when a huge event like this happens, it spikes. This is rare. Like people were thinking when we were above 20, like that's elevated compared to historic norms. And it certainly is. But yeah, intraday, anything can happen. What this does, guys, is it A, shows the volatility of the market. That's what it's for. But B, if you are buying or selling options, this adds to the implied volatility significantly. So if you're thinking, hey, on open, I'm going to buy some puts just to hedge my bets, you can do that. You do you, but you're probably too late. You're going to be paying a very hefty premium on that. Or if you are sensing the floor and you buy options to rebound, like those could print for you, but they're not going to be cheap just because of the VIX spiking like this. Conversely, if you're selling options, whether covered calls, although I mean, those are just smashed to bits, just to be honest. They'll at least have some premium there just because of the implied volatility due to the VIX. Likewise, if you sell cash secured puts, and I will be selling some, but not using all of my cash today, those will have a extremely hefty premium. VIX will be very volatile. You can see how responsive it is over a short term. The thing is, will be elevated for some time just because of this event. It may go from 62 to 35 by the end of the day. That's a huge collapse in the VIX, which is good, but that's still very elevated. So I think you're muted. I can't hear you.
There's a couple of clips that I want to play. We'll start with this one, and I'll get your thoughts on it, Roy. And then, or do we want to talk about the spread, the Japan piece first, and then go into the Fed? Because this is around.
Yeah, let's just talk about that real quick.
Sure.
And so I'll just kind of explain this. And I'm not an expert on macro or anything, but basically, there's something called the Japan yen carry trade, or it's a carry trade. There's multiple different types. It's usually using Japanese yen. So what it looks like is that somebody goes to ends up trading their currency for yen, and usually this is at the institutional level. So it's lots of millions, hundreds of millions, or billions of dollars. The reason why that's attractive is because the Bank of Japan keeps interest rates artificially low, basically 0%. historically, which is technically negative rates just because of the way inflation works. Japan carries an immense amount of debt as well. And so as if you were going to do this, and even Warren Buffett was involved in this, you carry a little bit less risk because you don't think that they're going to spike their interest rates or change things in such a way. So pull up, if you don't mind, Tevis, the US dollar to Japanese yen, or Japanese yen to US dollar.
You can pull it up. You have it right up.
Okay. Yeah.
Your VIX screen is still on. Okay, there you go.
This is going to show. Let me flip that around. Actually, USD digit. All right. This is the 1 year, and it's trading like a meme coin. So what happened is a lot of people ended up buying Japanese yen from their currency, usually US dollars, and then they would buy Japanese bonds and then borrow against the bonds like 99.5%, and leverage that, and then put that money into a trade in a country that has higher interest rates and likely prospects of growth. And so most of that has gone into the United States markets, especially in tech. And so that's one of the reasons why our markets have been doing so good. I don't think it's the only reason. I think a lot of the moves have been justified. It's also why European markets are not down as much as some others. But as this trade collapsed, and you can see just like it's trading like a meme coin, the yen to the US dollar, it's causing some people to cover their bets. And so that they end up selling out of their positions and returning their funds as well. The yen has been strengthening against the US dollar, which has caused pain in that. The Bank of Japan raised their interest rates by just a quarter point, but they had warned against it. I think a lot of people were calling their bluff and saying, oh, they're not going to raise. Look at the national debt of Japan. They raised anyway. And so a lot of people wanted to cover and began to cover, and that's part of this. But there are going to be margin calls on the institutional scale. And so this is what is causing a lot of this pain right here. Now, this is not very transparent as far as how much this is. I've seen as high as $20 trillion are involved in this yen carry trade. And this is the unwinding of that. And so this will take, some days to actually fully unwind. Some people are being forced to get out. And when you're forced to sell into this, it causes other triggers where people that aren't even involved in this, that they're on margin, and all of a sudden, boom, they're underwater, their margin called, they have to start selling. You have fear and panic, you have stop limits. And so a lot of those will just be triggering throughout the day. It's just like falling dominoes.
I just love the comments. Okay, so now what are we going to do? What's the resolution path? Is it just like, take shelter and wait it out? Or is the Fed going to step in? They're having an emergency meeting today.
For us individuals, I mean, it's personal investing for a reason. Myself, I have a lot of cash on the side. That's my hedge. I don't have puts or anything like that. I would have had a little bit of a hedge. I never have much of a hedge, but a significant chunk of cash for me. So I'll be deploying probably half of that today. We'll see how today goes. I don't know. I don't think this is a bottom. This is the very definition of catching a falling knife. Don't do that with money that you are having to borrow against or you need in the short term. Long term, you look at any crash, you zoom out and you're like, hey, that was a great buying opportunity. Some more so than others. 2008, not so great for a long time. The dot-com bubble, which this is not, it took a while to recover. So, but as far as market-wide, the Fed is late. I have never been a fan of Powell. I thought he did better than I initially gave him credit for, but I've always thought he was late, that they should have at least done a little tiny cut, actually as much as like 6, 8, 9 months ago, just a quarter basis point, just to say, hey, look, see, we're cutting a little bit. Yes, the markets would have went up. Maybe inflation would have been up just a tick more. But when you cut rates, the impact is not felt immediately, just like when you hike rates. And so Powell we talked about this on, I don't know if we talked about it in Bootleg or SoFi Weekly, but Powell ended up saying, hey, we're not going to do rate cuts this month. And we have to wait until the end of September for the regularly scheduled Fed meeting. Now, they are having an emergency meeting. this may lead to emergency cuts. So way back when people were talking about cuts, some bears especially were noting and saying, hey, rate cuts are really, really bearish. Some bulls were saying, no, rate cuts are really bullish. It depends on the type of cut. Had Powell cut, 6 months ago, 3 months ago, even last week, that's bullish because he's not doing it in the face of collapse, weakness, disaster like this. Emergency rate cuts, especially what Jeremy Siegel mentioned, and he is a popular CNBC. Well, he's on CNBC all the time. I know he's got a fund and everything. He said, "Hey, let's do a 0.75 basis point cut
Actually,
this month."
let me play that clip because I have it.
Go ahead. Yeah,
queued up.
I think he's a little aggressive there, but yeah, this is worth listening to.
Let me know if you guys can hear this first of all.
And before you play it, somebody mentioned they said that they haven't seen any legit notification about an emergency meeting. Yes, that's true. They don't always announce that. Usually they do, but they're absolutely having one. There's no way that they're not meeting to discuss this. They might not do anything, but go ahead, Tevis.
Okay, so let me know if you guys can hear this.
We've talked about quite a bit. It was down in the low teens, up 26 points a day. It's been over 50 at one point, 49, 80, and earlier, Tom Lee said, when we see the VIX peak and maybe come down a little, that could indicate some type of bottoming. Joining us now is Jeremy Siegel, Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business, Chief Economist at Wisdom Tree. Jeremy, I hate, you probably aren't happy to say I told you so either, given what we're witnessing. But you thought the Fed was staying at, once again, for the second time, staying at the party too long and too restrictive.
Absolutely. And, this may surprise you. I'm calling for 75 basis point emergency cut in the Fed funds rate with another 75 basis point cut indicated for next month at the September meeting. And that's minimum. The Fed funds rate right now should be somewhere between 3.5% and 4%. Let me give you very simple logic of my position here. At the June meeting, the Fed has said that the long run Fed funds rate, when inflation reached 2% and unemployment has come up to 4.2%, should be 2.8. That's the normal. 2.8 is the normal Fed funds rate. Well, on Friday, we blew it across the employment number. We're at 4.3. That even argues for a lower one. Now, as far as inflation, we're at 2.5%. We've gone down 90% towards the target on the inflation rate. We've overshot the target on the employment. Those are the two targets explicitly mentioned by the Federal Reserve. All right, and how much have we moved the Fed funds rate? 0. That makes absolutely no sense whatsoever.
I freaking love him. I like, that was an aggressive call. I hadn't heard that clip until now. I've just seen the headlines of what he was calling. 75 bips in an emergency meeting, and then another 75 next month in September is wild. Because right now, and this is the thing that I was saying earlier around how quickly this thing unwinds. Last week, we were saying, oh, well, the Fed should have cut 25 bips. Maybe in September, they're definitely going to cut 25 bips. Maybe even, and I mean, Roy, you were saying this in the last bootleg, maybe in September, they'll cut 50 bips. And I was saying, whoa, 50? That's crazy. And now this guy's calling for 1.5% over the next 2 months. And it's been a couple of days. It's insane, dude.
Yeah, I'm not even sure that we'll get emergency cuts. If they do, it'll probably have to be a half point. I don't think a quarter point's going to do it. So
here's the betting markets. Actually, we can probably see this live. If you go on polymarket.com, the betting markets are putting a 55% chance for an emergency rate cut in 2024. And you can see how that's moved up and down. Just a huge spike. Let me see if I can actually while you comment on that, go on the actual site and see if this has changed.
Yeah, so this will happen out of the blue. I think typically the Fed will probably announce, and probably today, that they're meeting either today or tomorrow. And a lot of their decisions is going to depend on how the markets are shaking out today, the rest of today, and tomorrow as well. I don't know. I would say it's a coin flip. That's what it feels like to me, honestly, which is not great. Again, these are very bearish. The Fed is late. I mean, this is what they always do. They're always late, and they tend to overreact too. So
worse than Tanner, that pesky Fed.
No kidding, man. Maybe they're related, Jerome Powell and Tanner. So, but it's tough. And it may, even though it's very bearish, them having to do emergency cuts, especially of the size that Jeremy Siegel is talking about, doesn't mean it's not the right thing to do at this point. The right thing to do, even though it's way too late, is still the right thing to do. And I don't know.
Let me take a look at this. So here, Fed interest rate, September 2024, 50 bips is at 68%. I mean, okay, granted, this is a small set of users or of people betting, but still, I think directionally speaking, indicative. And then emergency rate cut, I think, has moved down a little bit. It's now at 47% chance, whereas that screenshot was at 54% chance.
Yeah, VIX has fallen a little bit here in pre-market trading. So there's a little bit of recovery in the S&P 500. You can see on the right-hand side of the page. Let's see if I can zoom and drag. Nope, that's not going to work. But yeah, we were at 65. It's 56. It can change in a hurry. We're to open up. It's going to be pretty volatile. Again, if you're just tuning in, some of your individual tickers will have individual circuit breakers triggered. 7% is the number that the S&P 500 will have to go down for that first level 1 circuit breaker. I don't know that we're getting to that. Probably not. That's extremely rare. Something else has to be going on. So
I'll flip over to my Webull in just a second, like as the market is starting to open, and we can look at individual names, so I can salivate a little bit around what I want to buy and when. But before we do that, I wanted to see one last clip on Squawk, and I haven't seen this clip before. I don't think you've seen this clip before, so let's just go ahead and play it, because it is our resident permabull, Mr. Tom Lee.
there we go.
In the past, it always would help
You
to
can
know,
Yeah.
Tom, whether it's a sharp, scary spike down, which a lot of times the other side looks just like it, or people are hoping for that so much that they don't see that it might have longer to go. Do you get the feeling that this is not going to be a major sell-off?
For now, I think it is the former that you described. We have over 3 days, suddenly markets reversed, and Japan down over 20%. And as you're pointing out, the NASDAQ could even decline further. Declines like that are generally symmetric, but you have to watch the VIX. And when the VIX peaks and starts to roll over and fall down, the recovery can be just as quick. I think a lot of this depends on whether financial conditions in the U.S. start to tighten, meaning like, do markets seize up? But with interest rates falling, the consumer's still in pretty good shape. I think on the other side of this, it'll look like a growth scare, but it doesn't mean that
It's a
today's
growth
the bottom.
scare.
Yes.
It's kind of interesting that it almost looks like the market's doing what the Fed didn't do again. It's almost like, once again, they're there, but not really ahead of what's happening, and they're reacting, not anticipating, kind of again.
Yes.
On the way up and on the way down.
Yeah, the 2 years is signaling that the Fed is behind, because 2-year yields have fallen further. But it does seem like, as we look back, a lot more this is because of the surprise hike from Japan and the sort of knock-on effects from there. If that is the primary source of the reaction, I know it's going to be tumultuous for markets, but for the U.S. economy, it's not necessarily bad news. And I think that's why we can balance.
Some of your great and accurate calls have been based on inflation coming in like you thought, much cooler than the market was thinking at the time. I guess the flip side of that is that there can be the dual mandate. There can be labor market weakness associated with why that's happening. Was the asymmetric risk? Maybe it wasn't asymmetric. Maybe there was a great risk to the job market.
Well, markets don't like surprise. I mean, Friday's jobs report was disappointing.
How far back did they go with revisions down too? It almost looked like the whole story, the whole narrative that we had is suspect.
That's right. And I think many expected that because, the establishment survey versus household had so many gaps. And so that's kind of converging. But that means markets are waiting until August payrolls report, which is not for 4 more weeks, to really know. But I would say, to me, it still seems like July, even as that a report it was, it's more of an aberration. And I think the trend is still
weather. There's a couple of things in it.
Yeah, there was almost a record number of people that were having temporary layoffs and people who weren't working due to bad weather. And Texas had a big spike in jobless claims. So it does look like the hurricane had some effect, although the BLS said there was no effect.
Thoughts on that?
Yeah, I think this is one time, as far as like the Texas stuff and it being temporary, like there are, I saw some comments that said, hey, I think this is related to the jobs report and unemployment.
Mm-hmm.
It's a little bit related. I mean, like everything kind of gets together, but this is mostly just massive margin calls at an institutional scale. I think Tom Lee is a little bit incorrect there as far as the U.S. Department of Labor in their calculations of these temporary job losses in Texas. But, I don't think this spells like a recession for the United States necessarily. There's a chance that we have a mild recession. I think that's what'll happen. What's really interesting is just like the stocks, what they're doing and everything. So, the VIX is telling down, like Tom Lee had said. NASDAQ is down in pre-market by about 5%. Peak was right at 500. And so we are firmly in correction territory, which is down 10%, down 20% from the peak, which we're only
a bear market.
I mean, we're like another day like this. Like if this happens and holds through today, and then it happens again tomorrow, we're basically officially in a bear market from all-time highs. Like 2 weeks ago when you were buying at the top, that would be crazy. It can happen. I would bet against that personally. Long-term, like this. I don't think this is, by the way, going to just be fully done with, and the market opens here in a minute and a half, and so we'll watch that closely. I don't think this is going to be fully done with like today. This is probably a multiple week thing, but today may be the worst of it. Tomorrow, I don't think will be real fun either, but hey, depends on how the Fed reacts and what Iran does or doesn't do. Yeah, it's tough.
Let me throw up, because we are about to open in the market. I don't have a bell for y'all, and probably for the best. But let me throw up my Weibo here. I can just throw up the entire screen. Okay, what are we looking at? All right, what do we want to look at? Palantir, because that's what we're doing.
Palantir.
$21. Oh
Okay.
boy. Let's
throw up Robinhood. Tesla, just
by the way,
the names.
Lockheed Martin is like the only stock that was like up. How's Raytheon doing?
Yeah, it's down.
1%. Bro, Raytheon is my hedge. Okay. What are we doing? Tesla?
Yeah, look at Tesla.
Down
Tesla is
11%.
pretty wild overnight.
Freaking crazy, dude. Apple. 10% on Apple, back under 200 for Apple. Amazon's 154. Holy shit.
I mean, I was thinking it'd go down to 160, and I'd probably wait till 140 to buy. That might happen like in the next couple of days. That's crazy.
Wow.
Nvidia 92. It's down 14% pre-market. Yeah.
That's insane, dude. It's so crazy. Like when you look at technical analysis and you're like, that gap is never going to fill again. There's no way. Well, there you go.
All right. We are officially open.
SoFi. What am I doing here? SoFi is down 8%, 9%, $6, maintaining that $6 line.
Throw up the market, S&P 500.
S&P 500 is
because we're open.
Yeah, I see it. Let me just throw this by. Down 4% on the SPY.
Yeah, it's trading like PayPal right now, so that's not great.
Let's take a look at PayPal, actually.
Let's not.
4%. Come on, it's not that bad. I mean,
Yeah,
we've been at
it's not
59
bad.
all year long, man.
No, yeah, that's a normal day.
Let me take a look at.
You know, volatile stocks, especially those that have risen quite a bit, they're in the tech trade that are maybe forcibly unwinding, or people taking profits or hedging bets. They'll be a little bit more volatile.
The Bitcoin plays are screwed.
Oh yeah,
Michael Saylor's fucked. He just raised more money to buy Bitcoin. Like, that's great when it's going up, but when it starts going down, because he's like selling more stock, right? He's issuing more stock and then selling it and then buying Bitcoin, and then the underlying asset goes up, and so everybody gets rich. But then when Bitcoin's coming down, that's not good.
All right, SoFi and CrowdStrike.
CrowdStrike. See, look, things look like, are they bouncing back? I mean, we're on the minute candle here, guys, so I wouldn't really.
It's not bouncing back yet.
Holy, what was this?
Yeah, I won't show my portfolio, but my main account that is fully allocated, and I have a lot of cash in other accounts, it's down 15% today. 15%.
Bro, the NASDAQ is down almost 6% right now.
Yeah. And I said this before, somebody might have missed it too, so I'm just going to say it again. You're worth more than your net worth. So honestly, if you've made your moves for the day, this might be one of those days or weeks where if you can look away, look away. If you're, long-term investor, if you have some moves to make, do that. It's not wrong to sell. It's not wrong to buy. It's not wrong to just hold and do nothing. You got to figure out and know what you're comfortable with doing. And you're also, as far as being worth more than your net worth, if you are thinking of harming yourself because of a big drop down, you're like, wow, I've lost my year's salary in a day. That's scary. Call somebody that loves you. Call a suicide hotline. Honestly, guys, I'm not even joking. Please.
I mean, it's all fun and games when you gain your yearly salary in a day. I mean, you got to be prepared to lose it in a day too. That's the game, right?
Yeah. Well, the tough thing is, like, this is one of those things where, yeah, if somebody put it all in dog whiff hat and they're down like 25% a day, it's like whatever. When you're investing in like large cap stocks or you're just like, hey, you know what? I'm just an index fund investor. I'll just do it in the NASDAQ. And you're down this much this fast. Like, that's scary.
Just pretend you own SoFi.
Yeah, there you go. Osiris says 200,000 gone. And until you sell, until you lock in gains or losses, I mean, it's not real. It feels real. He says it's all good. So
just think, for every 200K that you've lost, some other person has lost 400K. And I mean, it's everybody that's feeling it. It's not like, so this is the thing that, like, at least makes me more reassured in times like these. Usually I have like the stupidest picks with the worst god awful timing. And when things like this happen, I'm like, okay, it's not just me losing money today. It's not my fault. It's the global economy that's unwinding. I also found this tweet fairly funny. I'll throw this up and then I'll throw your screen up, right? There have been some banger tweets coming out of this. The global economy is becoming unburdened by what it has been. What did you have up here, Roy? Let's see. Oh, the S&P.
Yeah. I just sold some options real quick, so we'll see if they fill. Yep, they fill.
I feel slightly sick. Go outside. Go to a park. Go do something else. Close the app for a while. It's sucks in Canada because we have the day off today. I don't know about you guys in the States, but like we have the day off today. So I like literally I was going to make a YouTube video about SoFi, and I don't think anybody cares to see that today.
Yeah.
But
Yeah, Palantir has earnings today. No one's gonna freaking care. Like it just like they could be like, hey, we're now the operating system of NATO, and they'd be like, yeah, okay, cool, down 50%. How about that? I mean, not really, but yeah, this is a good day to get away from the markets after you've made your move. I plan to check it a couple times. I still have a couple things I need to do this morning, but it's a busy work day until like 8 o'clock. I'll tune in for Palantir earnings. I may not even look at the price on the market, but that's not bad, actually, by the way. If you're a long-term investor, you made your moves and you're like, hey, I'm in Apple, Amazon, or whatever, you can uninstall the app. That's fine. Do what you need to do for your mental health.
And I think, like, if you look at those studies that have been done around where the biggest gains happen, they usually happen immediately preceding the big crashes. So, I mean, like Tom Lee said, right? This thing can turn around just as fast as it went down. We'll see what the Fed does. We'll see how things start playing out. Of course, there's going to be people that are stepping in to buy this dip. Of course, there's going to be people that are, staying on the sidelines until they get more assurance. We don't know yet, but yeah, I mean, it's interesting nonetheless to watch it. I don't know, like everything's down.
Hey, SoFi is looking pretty good. Now down only 7.89%. And I know you might be like, well, that's not good. Overnight, it was down at one point almost 14%. So,
yeah, I mean, look, we, and I said this on the last, when did I say it? SoFi Weekly, like we've been giving Anthony Noto so much shit for staying so conservative for so long. And now in times like this, like he looks like an absolute genius.
He's a genius. Yep.
Yeah. Any last thoughts before we log off? We're going to probably do the bootleg weekly Tuesday night. Roy, looking at you to confirm that.
Yeah. Let me double check schedule. I think that's fine. I think that's the plan, but let me confirm here. So yeah, yep, bootleg weekly right there. So we will do that at 9 p.m. Eastern time.
Ooh, we didn't talk about Buffett at all. So maybe we can keep that for bootleg weekly, since I don't think we'll have enough time this morning.
Yeah. And it's a little bit related to this too, but yes, S&P's bouncing back a little bit. It's down now only 3.72%. So yeah. I mean, that's the thing is if you're a long-term, if you're buying shares, some of these prices long-term are a blessing. It may take a while to recover, but if you were looking for a deal, the thing is a lot of people say, I'll buy at this level. Something happens. It's like, I'm scared. I'm not going to do that. Know what you're comfortable with and execute on it.
Bro, this is crazy. Like, look at QQQ has officially corrected 15% since July 10th. That's literally the week that I started buying QQQ. I bought the top.
One day before the all-time high. One day.
Seriously. It's insane. That's uncanny. What the heck? So there you go, guys. I'm sorry. But it'll get better. Tune into Bootleg Weekly on Tuesday. Enjoy the rest of your day. Don't look at the market unless you're buying, and don't be selling.
Don't panic. That's really the thing, And if you do this time, next time, just know like it's okay to be hedged, or have a plan in place. Know what you're comfortable with. Know what your risks and tolerance are. And this is one of those days where you find out. You'd be like, oh, I'm very comfortable being in all these leverage positions, and you find out, okay, actually, I'm not. Just kidding. You can make changes in the future, so adjust accordingly. But
that's the main thing, right? Like, I think that the thing that is scary is levered positions, is options plays that are going to like combust like all of my calls, for example. But the thing that I'm assured in is, okay, well, whatever. I'm not going to be selling anytime soon. And I know that the company underlying is really great. So I can afford to just turn off the app or turn off the market and just go do something else, because it doesn't really change the thesis. And at the end of the day, like a 10% downward move in any position that you're in, or 15% downward move in any position you're in, after a year that we've had, is only like a month worth of your gains. right? So it's like it's definitely not the end of the world. We're back to levels we haven't seen since mid-July, guys. Like, calm
Yeah,
down.
actually, that's a good thing. Let me throw up I'll do the S&P 500. I'll do the Nasdaq. It's more volatile, more fun, more tech heavy. So we'll do year to date. And this doesn't look good, but we'll zoom out here in just a second. So let me share this. Maybe that's the last thing here. All right. So this is year to date on the NASDAQ. We're actually down year to date. Who would have thought that, back in July?
Yeah, but look, you're in levels you were back in May. Like,
Yes.
oh, God forbid, guys. Levels back in May? How are you working through this potential trauma? Like,
and let's go a year out. Year out, we're actually this is up substantially. So it was 375 a year out.
Let me throw this out on the
17% year to over the year. So yeah, year to date is actually still up 9.5%. I was mistaken. I was looking at these numbers up here.
Let me throw this up on the Weebles.
5-year up 136%, and we've had.
Are we looking at the
COVID crash? Okay. Yep.
Right. So there you go. Like, you're at this level in May, and that you're at this level again today. Does it suck? Yes. Is it the end of the world? Like, dude, absolutely not. Like, look at this insane chart. It's gonna come back to normal, and you're gonna be fine, and life will go on. And yeah, that's what I don't get about people complaining about these things, because like Apple, like I was buying Apple in like down here ish. And then now Apple's like, oh, wow, it's down to 208. I'm only up 20% on my Apple position that I bought in March. Well, life sucks. But I get like the counter of that argument is if you are in levered positions or if you have options plays, like, yeah, that money can actually go away. It's not like, oh, I'm in Apple and they're going to be fine.
Oh, yeah.
Or I'm losing my gains over the past 3 months, right? So anyways, that's just like a counter perspective to consider. We're going to be continuing to monitor the situation, and we're going to be going live Tuesday at 9 p.m. So let us know what you want us to cover. Message us on X or let us know in the comments, and we'll make sure to talk about it. For right now, this is the Bootleg Weekly Emergency Market Open. Thank you all for being here.